Precious Metal Summit 2017 here in Zurich, and Commodity TV is here live on stage for you. And with me here is now Alexco Resources. Clynton Nauman, the CEO of the company, wants to give us an update. Clynton, welcome.
Thank you, and thank you for having me by here.
Yeah.
So
great to have you here. What's up? 2017 was very interesting for you guys.
Exactly, very exciting year in 2017. So we've started development at Keno Hill, driving the first decline there into the Bermingham deposit, which, as we discussed last time, is about 800,000 tons of better than 600 grams per ton silver material, of which a couple 100,000 tons is in the existing proposed mine plan at a grade of more than 1,200 grams per ton.
Wow.
So we've started developing that deposit, and in addition to that, we carried out a 13,000-meter exploration program, the results of which we've just released also. So lots of activity and progressing as per plan.
Perfect. And I think you also finished in March. It was like a PEA, right? So maybe you can comment a bit on those numbers.
Yeah, that's right. So that plan outlined about 1 million tons of material that can be mined in this district at an average grade of 843 grams per ton. At 400 tons a day, that's an 8-year mine life. And it's a relatively small mine, 400 tons a day, which is the size of our mill. I think that the pre-tax NPV on something like that is $110 million or something in that kind of an order, but the internal rate of return is more than 70%. So it's a very robust project, and certainly one that has lots of opportunities to grow beyond that.
The super high rate of return, internal rate of return, I mean 72%, this is like crazy, but has this something to do with the small capex also?
Yeah, exactly right. So this district was in production previously, so all of the infrastructure is in place, including the mill, which is a conventional flotation mill. And so 27 million Canadian from start to go until you get to positive free cash flow, and that includes working capital. As I mentioned, we've already started on that program. Excuse me. So we are already, $3-4 million into that program.
Okay, super. And I mean, you have a good cash balance, on the one hand. On the other hand, you have $7 million restricted cash, and you have income from your environmental group. So you can do that by yourself, right?
Yeah, exactly right. So more than $20 million of free cash, $7 million of restricted, and the environmental business is doing well. It's in both Canada and in the United States.
Fantastic. Can you give us a bit more of an insight, as it's not only silver, you have also some byproducts, what will be the AISC on your production? How many ounces silver equivalent you will produce per annum?
Yeah, so, the silver equivalent production here is in excess of 5 million ounces, between 5 and 6 million ounces per year. Our head grades on average will be, like I say, more than 800 grams per ton silver, but with about 4% zinc and 3% lead. And the all-in sustaining costs in the first 3 years should be about $9.50 US. And $10.50 for the entire mine life. Now, of that, I mean, there's about $9 of the build-up in the oil and sustaining costs is from direct operating costs at site, plus the smelter costs, the what's called the treatment costs and the refining costs. And then against that, there's about $6.50 per ounce of silver net back from lead and zinc sales.
Wow, fantastic.
And then you build up from your site costs, G&A, exploration, and sustaining capital beyond that to get back to the $9 to $10. So, so there's on a per ounce of silver basis is about $6.50 of net back from lead and zinc.
Fantastic. So even with the silver prices today, we talk about a $7 healthy margin, I would say.
Yeah, exactly right. So it's important.
That's like $35, $40 million per annum.
So there are certain things that are sort of outside of our control. Currencies recoveries are important in this business, especially if you're a Canadian producer. You know, at 80 cent dollar or 78 to 80 cents is very favorable for Canadian producers. And of course, if you're producing a byproduct of lead and zinc, the prices of those,
which is in high demand.
Exactly right. So yeah, so you have, I mean, the sense is that you have some kind of a tailwind here on the things that are outside of your control. And you know, in a $16, $17 silver market, this project is definitely in the money. But we are, you know, but we're going to do it in a disciplined manner. We're going to go about halfway down the line with this development work, and before we launch into the second decline, we have to drive. Then we'll step back and we'll make a very deliberate decision to pull the trigger and drive that second decline, because at that point we're headed for production in the fourth quarter of next year.
Exactly, that would be my next question. How does 2018 look like? What do you want to develop, and when, let's say, can we expect really then full commercial production?
Yeah, so we'll make a decision in the first quarter as to whether or not to continue on with the underground work, put in the second decline. At that point, you're essentially committed for production, and that would, and all going well, that would be in the fourth quarter of 2018. Plus, we would continue to do our surface exploration that's been so successful, and you know, just along those lines. We just recently released the information from our 2017 exploration. We did $3 million worth of surface exploration. Once again, that was mostly in the vicinity of the Bermingham deposit. And we continue to get, you know, very, very encouraging results. You know, indications that the mineralization, you know, continues to be, you know, 3, 4, 5 meters thick, grades in the 40 to 80 you know, ounces per ton range. So you're in the kilogram, 1,000, 1,500 gram range. So yeah, every indication that this Bermingham deposit might really turn out to be something very important.
As you said, you will work like with around the 840 gram level. Now you have like 1.2 kilograms, 1.5 kilograms. Does this change anything in your processing? I mean, do you have to adjust a little bit because it's so high grade?
So be careful here, because we're talking about, you know, resources in the ground versus, say,
head grade.
Mining head grade. So we generally carry. Yeah, but we also carry dilution. So we've got 2 major underground deposits we're developing here, and one of them we carry about 18% dilution. In this Bermingham deposit, which is a very high grade one, we're carrying about 30% dilution at the present time. So we're pretty conservative in the way we sort of put these things together. And on the metallurgical side, no indication that the recoveries that we've been getting are going to do anything but, you know, be maintained, if not improve. And even more important than that, the amount of silver that finds its way to the lead concentrate is about 90% of the silver in the feed. So that's very important in terms of the commercial value of the concentrate that we produce.
Great, perfect. Then thank you very much for the update. It was really interesting. It looks like straightforward. It's fully in the plan, and you really have it in the hand.
Well, it's all about execution.
Absolutely. Great. Thank you very much.
Thank you.
Great. Yeah, ladies and gentlemen, it was Clynton, Nauman, the CEO of Alexco Resources, and you heard it. The whole production plan, the whole thing is fully on the plan. It's fully on the plan, on the path, straightforward, and we really like what we see. $9.50 AISC in the beginning, $10.50 afterwards. They have good byproducts and byproduct credits, of course. And I think those grades of over 800 gram silver as a head grade, that is really fantastic for the industry. So check out the company. Thanks for watching us. Bye-bye from Zurich.